Excellent. I want to welcome everybody to the webinar today. This is Off Market Insiders. My name is Scott Lundgren. I will be your presenter today. And today we're going to talk about how you can execute legal insider trading. What we're talking about here is creating wealth like the top 1%. You're going to be doing this by investing into what we call off market assets through legal insider trading. What do you think is different about the top 1% versus everybody else? How do you think that they create their income versus normal people? What do you think is different about their time and how they create income? What can you change today in your life to become more like the 1%? These are just some of the questions that we're going to answer as we go through this webinar here today, but I put these here right in the beginning to start that thought process of, what is it going to take? What needs to happen in order for you to start to reach the goals that you've set for yourself? About 76% of Americans admit that money is the most significant source of stress in their lives. To take that one step further, at 65, people that try and retire, we have found that 95% are either dead, dependent, or still working. There's only 1% that consider themselves independently wealthy, and that's the 1% that we're going to talk about, emulating here today. 4% feel like that they're comfortable, so we'll just lump them together. That means 5% are okay or good, and 95% are not. There's going to be a lot of correlations that we're going to draw through this webinar here today of why that is and what you can do to help get out of that 95% and get into the top 1 or the top 5%. I've also read recently that Social Security is going to be out of money by 2035, and all the stats that you see in front of you is based on people still getting Social Security checks as well, which means if that goes away, there's going to be a lot of people in a lot of trouble. So what can you do to solve that? What can you do to put control back in your hands as opposed to the lack of control that you feel like you have now? And that's really what our story is. At Off Market Insiders, we have investors that have gotten together, and over the course of literally hundreds of man hours and millions of dollars of our own money that we put into the processes, we have gotten to the point now where we have amazing systems, amazing processes in place that will allow just about anybody that will sit down and affect the plans that we put in front of them, go out there and create wealth much quicker and much faster and much easier than the path that they were on before they worked with us. We've worked with dozens and dozens of different companies to get to where we're at. In fact, we've spent so much time and so much money getting to the point where we're at. We feel like that by allowing individuals to become an off-market insider and gain access to what we've already put out there, it's like shortcutting yourself in line. It's like jumping to the front of the line without having to sit and do all the heavy lifting. So that's what we want to do. We want to provide to you guys opportunities that you normally could not find on your own. Provide information to you to allow you to make quality informed decisions on your investments that you're going to be doing without having to go out there and spend that time and energy and doing all that research on your own. Let us take care of that for you, so all you have to do is execute and move forward. We feel like that success is predicated upon correct principles and strategies, and that when you know them and that you apply them effectively, you can create success just like anybody else. So the systems and the principles and the strategies that we're going to put forth here as we talk through this conversation here today, and if you do join and become an off-market insider, the ongoing conversations that we're going to have with you, we're going to help instill these principles and strategies so that you can get out there and create wealth. Our goal is very simple. We want you to become an off-market insider today, where we can then turn around and help you create wealth outside of the stock market and to create consistent, positive returns using safe, secure assets. This term off market, it's good to kind of define it for you so you understand what we're talking about. And the simplest way of looking at it is just anything that's not stock market based. I do talk a lot today about the stock market. I'm going to talk a lot about how that's one of the biggest reasons why people are not where they want to be, is because they're too heavily invested in the market. And it's not easy to go out there and find alternatives to investing in the market. For example, let's just say you're a standard W-2 wage employee, like the vast majority of people in our country today. If you go down and listen to your employer's options, if they even provide options, not all employers do, but if they do, for saving for retirement, 401ks or IRAs or other traditional types of platforms that they're going to put in front of you, they're all stock market based. Right? Now, there's different ways of choosing more aggressive or more conservative options within that, but it's still all stock market based. And the kind of collective opportunities that you can't go out there and find out on your own are what we want to bring to the table for you. Vetted out wealth creation processes and opportunities that allow you to, again, just shortcut or jump to the front of the line, where you do not have to go out there and reinvent the wheel. An example of why the 401k and the IRA programs aren't working is from somebody who's actually considered to be the father of the 401k, Ted Benya. Ted said recently that he helped open the door for Wall Street to make even more money than they were already making. And when he says Wall Street, he doesn't mean you or I. He means the institutional investors of the world. The reason why he created the 401k, or he helped implement it for some of the companies in the beginning that, it started just kind of catch like wildfire after he got it started, was he wanted to give more control back to the individual to allow them to control their retirement a little bit easier than the way it was done before. Before, it was pension programs. You just turned it over to the company. The company had some officers and they took care of it. And you really had very little or no say in the process. 401ks were designed to give you a little bit more say, but what had ended up happening is Wall Street, institutional investors realized, but man, this is the easiest, fastest, quickest way that we can get into people's pockets. We can go directly through their employer. In fact, we can get them to probably even auto withdraw from their paychecks to deposit money with us. So they saw this opportunity, they took it, they ran with it, and now it's corrupt. And it's so corrupt that it's really the reason why a lot of people are struggling here today. So we want to help you through what we call legal insider trading. Okay? Now, I don't mean actually break the law. We're not going to turn you into Martha Stewart and risk putting you in jail. What we're talking about is not in the stock market. In the stock market world, insider trading is illegal. Now, I could talk a lot about this subject if I wanted to, but I'm not going to dive into this today. There's good reasons and bad reasons for legal insider trading and illegal insider trading. And rather than diving into that, I'd rather talk about what we're going to do, which is get you off the market, get you into other asset-based types of investment opportunities where information is good. The more information you have, the more that we can provide to you to make a quality, informed decision. You can use whatever you'd like, and you're not going to be restricted like you are within the stock market. So there's some questions that often come up as we go through this. Again, off-market insiders, we've been around for collectively over 50 years. Okay, a ton of experience down here with our different investors, our officers, and our partners that we have here. And what we have found is that a lot of the questions really fall into the same kind of categories. We often hear, hey, I was raised with the mentality that you just invest, you buy and hold, and you'll create a ton of wealth. Okay, is that really true anymore? Is that the case? What do the top 1% do differently with their time? We're going to talk a lot about time, money, knowledge, leveraging all these things to be able to get ahead. And learning how to leverage yourself properly is one of the key principles to financial independence. What financial instruments do I need to build wealth? This is very important to cover the instruments that you need to put into place. And how can I gain the same access as the top 1%? Again, this is our legal insider trading, getting you access to information and opportunities that you just can't easily go out there and do on your own. So let's go back to the stock market again and answer the question, will buy and hold in the stock market create wealth? Well, you can look at this chart, and this is over the last century of what the stock market has done. And you can see, like any typical stock chart, it goes up and down and up and down, right? We all know that this is the volatility of the market. But let's take a couple of snapshots to show you how timing is critical for stock market based retirement to work. If you wanted to retire, say, at 1928 or 1929, okay, if you retired before then, you're okay. But what if you retired a little bit after that? In the big crash, the Great Depression, it took 30 years to recover. So during that time span from 1929 till 1959, chances are your retirement program wouldn't be sufficient. Same thing happened again in the 60s to the early or the late 1990s, right? So 30 years. It took an entire generation for your particular investment vehicle to recover its losses. Now, this happened again in the 2000s. It took 14 years to recover. And I don't know about anybody listening here today, but do you think that there's a correlation to the fact that most people are heavily invested in the market and the fact that 95%, when they get to that retirement age, can't retire on their own? It's just because of timing, right? Unless you want to retire at the perfect time, it's going to be very difficult. And this is a smaller snapshot. We're not going back a century. We're only going back about 10 or 15 years now, but you can see the cycle continues to happen. 2000, 2001, 2002, big crash. Okay, 2008, we're very familiar with the 2008 crash. Everybody lost money. You know, even Berkshire Hathaway, you know, Warren Buffett, the Oracle of Omaha, who we're going to listen to in just a moment, lost 38% in 2008. So if he's not immune, do you think you're immune? Do you think you want to continue to put yourself in a position where that volatility can hold you back from reaching your goals? Think about the last 10 years. If you look at this chart, what's happened in the last 10 years? We've been on a bull run, an amazing bull run. Anybody in the market over the last 10 years would have done well. Bloomberg said, though, that on average, people are still only getting 3.71%. Okay, market average, even just industry-wide average, is 7% over the time frame. So 3 to 7% is not going to cut it for most people, right? What's going to happen after this long bull run? What's going to happen? There's going to be potentially another crash or another pullback. Right? Do you want to be heavily invested in a market that is destined to repeat what has happened in the past? Let's listen to Warren Buffett and how he feels about the types of assets that you should acquire.
You know, listening to you talk, though, Warren, when you say, with your comments about bonds, that makes me think of financial assets in general, which includes stocks. And I think about the printing presses, not only in this country, but around the world. You've seen the commercial cha-chung, cha-chung, cha-chung with the central banks. And there are periods where financial assets are great, from the like early 80s to 2000. And I just wonder if there's then periods where hard assets are great. And you see Paulson in gold and some of these other guys in gold or commodities. Are you just not comfortable with commodities? Are there times where you should be downplaying maybe stocks or businesses and going totally full bore into commodities, but you're just not comfortable doing that?
No, the alternative with me, Joe, the alternative, I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But the alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type investments. And so I've said consistently for the last few years, I would vastly prefer to own common stocks than fixed dollar investments over a 5 or 10 year period. I don't know about the next 5 hours or 5 days. And that might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm, and then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it.
A couple things that I want to point out about that statement. He mentioned I prefer income producing assets like rental real estate, or he mentions the farm as well. He talks about the two different types of assets. He says there's a lump sum type of asset and then an income producing asset, and he wants you to focus on the income producing assets that are out there. The lump sum type of assets are speculative and quite honestly just, a hope and a prayer that someday there's more value there. If you invest into an income producing asset, you know every year that you have a certain return that's going to happen based on the asset and its performance. That is the difference between the average American, the way that they're invested in their 401ks or their IRAs versus the top 1%, income producing assets. So how does that change their time? What allows them to get a better return on their time versus the normal person? Your average person is creating active income. Most people in America, most people listening to this webinar today, they're making income through an active source, meaning a job, a salary, a commission, a business that they have to be at constantly in order for it to produce income. And what that means is you're getting paid while you're working, but you're not getting paid any time outside of that if you don't have income producing assets. Well, look at a 40-hour work week as an example. I use this slide because it's visual, right? It allows you to understand that you're only getting paid 25% of the time. Look at the chart. 75% of that chart, there's no income. You're not working, but you're not making income either, right? So it's nice to have 75% of your life back, right? 40 hours is what most people work, but if you're only making money 25% of the time, if you're not making basically 3 or 4 times more money than what most people are making, it's going to be very, very hard to get ahead. Right? The 1% of the world generally don't make their money through active income. They generally make their income through some sort of dividend, portfolio return, income producing asset, something that pays them passively every hour of every day without having to put any time in. Okay. The real reason why that is valuable that you need to understand, and that's leveraging your time, is it's something that can be repeated. If I make an investment into an asset and it produces a return, I can turn around and duplicate that. I can get a second asset, a third asset, a fourth asset, and literally an unlimited amount of assets because time is not part of the equation. If all I need is capital and my assets producing capital for me, I can repeat this action over and over and over again. With time, you're limited. There's only 168 hours. If you're making money with a job, even let's just say you have a 40-hour work week and you wanted to double your income, so you say, Scott, I'm going to get a second job. Right? So now you have an 80-hour work week. Well, congratulations. You've just decided that you don't want a life, right? To work 80 hours, you're going to sleep another 40 roughly a week, right? So that's 120, 130 hours of the 168. You barely got enough time to eat and do maybe a couple things, and that's it. Your life is not the kind of life that we want to help you create. We want to create an intentional lifestyle where your income is high enough, your returns on your assets are high enough that you can do what you want with your time, not what you have to do just to create income. So I'm sure a lot of you right now are telling me, Scott, I got it, right? I want to create wealth like the 1%, but there's a few things that you're probably asking yourself. How can I get started now? It's a good question. What can I do today to put myself in a category where I'm more like the 1%? What can our company, what can off-market insiders do to help you get there? And what are the specific financial instruments that I need in order to become like the 1%? Well, that's why we're here today. This is what this whole webinar is all about, is to help expose to you what we believe to be the best ways to create wealth in these changing times. Let's start with a simple financial instrument. one that the wealthy have been using, by the way, for over 160 years without ever have suffered any sort of a loss. Okay? And I'm going to use this financial instrument as an example with buying a vehicle. Because most people on this webinar, I'm assuming, have bought a vehicle, and probably a vast majority of those people have also utilized some sort of financing to buy that vehicle. It's a pretty common thing that most people do today in our country. I'm going to go ahead and spell out if you buy 3 cars. So let's use this example of you purchase a car, and you can see with these little arrows here, what I've done is I've shown to you that if you purchase the vehicle, you're going to go into debt, and then you're going to pay that off through a loan. You're going to go into debt again on the next car. You're going to pay it off through a loan. And over the course of 3 vehicles, you've purchased, let's just say each vehicle costs about $30,000. You've purchased $90,000 in vehicles. You spent about $20,000 in interest. So we've spent $110,000 over the course of 20 to 30 years to buy these different vehicles. And at the end of that time frame, we have not created any wealth of any kind. All we've done is just spent money on a vehicle, on a car. That's it, right? So what about the guy who comes to me and says, Scott, I'm really disciplined. I'm going to save the money first, and then I'm going to buy cash. Well, the same end result. He saves the money. He drains the money to buy the car or the vehicle, right? He saves the money. He drains it, and we do this again and again. At the end of that process, when he buys that 3rd vehicle, he's in the same boat as the other individual that's buying via financing, other than the fact that he didn't pay interest. Right? So he saved 20 grand in interest. But he didn't create wealth. There's a big difference. Now, if I go to somebody who understands the financial vehicle that we're going to put into place for you, they're going to get the financial instrument in place first. Then they're going to go loan against their financial instrument. They're not going to go to the bank and get a loan. They're going to loan against themselves with their own financial instrument. And what's going to happen is they're going to build wealth the entire time that they're paying back the loan to themselves. So same scenario, they're going to loan, pay back, loan, pay back, loan, pay back. But their financial vehicle the entire time is going to grow as if the money was never removed. So they're going to continue to gain interest and returns and cash flow from their income producing asset, from their financial instrument the entire time frame. And at the end of that 20 to 30 years, instead of having nothing left like everybody else, the 1% are going to have $250,000 or more than $250,000 sitting there in their financial instrument account that you don't have or the average person doesn't have. Do you currently purchase your automobiles this way? Okay. If this one strategy can make you more than $250,000 difference to your overall net worth, and you don't have to change one thing about your day-to-day life, do you think that this stops with buying automobiles? Do you think you could apply it to your home, your vacations, your business? If you have a constant in and out on your business as far as, flow of money, do you think you can roll that through a financial instrument first and build wealth while you run your business? Absolutely. College funds, I could go on, but the point being is most people have about 40% of their budget allocated towards debt, meaning car loans or mortgages or some other type of revolving debt, credit cards. If you can run all of that money through your financial instrument first and then use it the same way that you're doing it now, you can continue to create wealth the whole time that you're just living life. Just doing the same things that you're doing before. We're not going to make dramatic changes. We're not going to quit your job. We're not going to do any of those other things that you might hear out there is, oh, hey, you got to make these wholesale changes. No, let's just make some baby steps. Let's just do some simple things and create wealth the entire time that you're living and spending and doing everything else that you were normally doing. This financial vehicle has some amazing things that you need to understand. It's guaranteed annual growth. No matter what's happening in the stock market or the economy, we can guarantee growth. You can tell banks to take a hike because you can now become your own source of financing. How would you like to pay yourself interest back instead of a bank? Right? Your savings, they don't go backwards when the market crashes. Okay, we talked about earlier that these 20, 30 year time gaps between when it goes down and when it finally recovers. Okay, we can provide a safe and liquid reserve fund to help you whenever you need it. Access to your money without restrictions. Look at 401ks, IRA programs. If you need access to that money that you've socked away for retirement, because something happened in life where you needed to get access to it. It's very difficult, if not impossible, to gain access to that money. There's high interest, structured paybacks, all sorts of things that you have to jump through hoop after hoop after hoop when it's your money anyways. You put it into a financial instrument like what we're going to talk about, you use it for anything you want, anytime you want, without any restrictions of any kind. And your loans that you take out to pay, to purchase vehicles or cars or, vacations or whatever you're going to use it for, it's tax free. And I'm going to explain that a little bit more as we go through this. And you might be saying, Scott, that sounds wonderful. How come I've never heard of this before? Well, you have, and you just didn't know it, or you didn't know that that's exactly the financial vehicle. Foster Farms bought their very first plot of land through this same financial instrument. Ray Kroc, McDonald's, was about to fold. Okay, this is obviously back in the beginning days of McDonald's, but it was on its last legs, and he had to use this financial instrument just to keep McDonald's alive long enough for it to continue to grow. We all know it today is one of the most successful companies on the planet, right? J.C. Penney, same thing during the stock market crash that we talked about earlier, right? In 1929, 1930 range, J.C. Penney's was out of money. Nobody was buying stuff at the retail market at that point. I mean, people were dead broke. They couldn't go buy the types of things that J.C. Penney normally sells. So J.C. Penney's was, again, just like McDonald's, on its last leg. And the only way that he kept it going was using his financial instrument that we want to help you use as well. The Pampered Chef, Doris Christopher, this is a phenomenal story. You should just go Google it and listen to what she's done. She went everywhere to try and borrow money for the Pampered Chef. Bank after bank turned her down. Nobody would do it, right? So she used her financial instrument that she had in place. She took a loan for her business against herself, and she sold the business within, I think, about a decade to Warren Buffett for over $900 million. And not a bank would touch her 10 years earlier. Okay. Same thing with Disneyland. We've all heard of Disneyland, happiest place on earth, right? Well, when Walt Disney was out there looking to create Disneyland, do you think he was going to get a loan from anybody? Not a bank, not a one. Got turned down right and left, had to use this financial instrument that we want to get you involved in to be able to keep it alive. And I just use these examples because these are household names. Everybody knows McDonald's and Disneyland, but I could give you hundreds of examples just like this of even average individuals, just normal people that use this financial instrument to change their whole world, including one of our main officers here down here at our company that I'll share with you here in just a little bit. And that's not the only financial instrument that we have to share with you. There are done-for-you real estate opportunities. Okay? Done-for-you real estate is a fully renovated home or apartment building that an investor can purchase immediately. Okay? They don't have to worry about sourcing it. They don't have to worry about rehabbing it. They don't have to worry about any of the normal stuff that you think about when you think about how can I put real estate into my portfolio? I need to know, all these things. I need to put time in. I need to have finance. I need to have all that. No, just simply let us take care of all that. Okay, we're going to do it for you. We're going to get all of those parts of the equation out of the way. You just simply use your capital to invest, and we will place it in the done-for-you real estate portfolio. And within that portfolio, you get expected returns. So let's kind of compare stocks versus done-for-you real estate. Number one, stocks can go up and down. We've talked about this many times. You understand the volatility of the market, right? Done-for-you real estate will create cash flow, and that cash flow is going to be very consistent. It's going to be safe. It's going to be very conservative, right? But it's going to be consistent on an annual, monthly, and annual basis. And it doesn't matter what happens to the market. The market could dive tomorrow, and your cash flow will not be affected by the market or the conditions in the market. Stocks are very high risk. You could literally overnight lose everything. We've heard the Enron stories, and I could go, into the 2008 crash where average person was losing 50, 60%. Even the overall market lost 30, 40%, but most individuals were getting hammered worse than that. They were 50, 60, 70%. I had a guy who called me up and he talked to me about his 2008 crash, and it was just heart-wrenching to hear him talk about how he had saved for his whole life. He had worked hard and he thought he was going to be there. He thought he was going to have it. He finally got to the point where he felt like retirement is within his grasp, and then 2008 happens, he loses more than half of his retirement, and he has to continue to work. And I talked to him 15 years, or let's see here, no, it's 2008, I talked to him 8 years after that point, and he had not even recovered his initial 2008 volume or amount yet that he had in the market before that. So, when you look at done for you real estate, it's safe, it's secure, it's predictable, it's the type of investment dollars that you can count on. The other thing is taxation. Stocks are taxed at the highest rate the IRS has in their tax code, while real estate has tons of IRS tax breaks that make it one of the lowest tax rate categories in the entire tax code. So that alone, if you're jumping from paying 30, 35% in tax down to the low 20s or the high teens, that's an additional 5, 10, maybe 15% return on your investment just through taxation, right? So why turn around and hand it back to the government if you don't need to? There's a lot of other benefits. Potential return on investment could be 12 to 40% or more. I'm going to break that down here in just a moment. Your time is not a part of the equation. I get a lot of people that call me up and say, Scott, I love the concept. I love the idea. I'd much rather be invested into something safe and conservative than where I'm at now, but I don't have the time to go do it, right? And that's okay. I understand. And that's where a lot of people are at here today. We can take the time equation off the table. Let us go source the properties. Let us go do everything that's necessary to get a real estate deal to the point where it's cash flowing. You just simply step in at the end of the line. Remember, again, we're going to cut you to the front of the line. You're going to invest. You're going to own the asset from that point forward, and you're going to reap the rewards while we do the heavy lifting. Okay, you don't have to worry about fix and repair. You can invest anywhere. I had a guy from San Francisco call me and say, Scott, my market here is not, conducive to cash flow. And it was obvious. His medium home price was $1.2 to $1.5 million. Where we would encourage him to invest, which is more in the Midwestern markets, we can get 10 homes for that same amount of money, right? So returns are going to be dramatically more because we've already gone out there and we've sourced the best markets. We've sourced the best neighborhoods. We've sourced the best properties. You don't have to do any of that kind of thing. You just simply invest and reap the rewards. So the kind of process that we go through is, first of all, we look across the country and we decide on the best markets. We take within those markets and we find the best neighborhoods. Within those neighborhoods, we find the best cash flowing homes. Because even within a good neighborhood, you could have a home that doesn't cash flow very well, where 2 doors down, cash flow is great just because of how the numbers work out. So you need to understand how to do all that. And tenants, property management teams, you guys can have the best vehicle in the world as far as a real estate property or a done for you type of deal. But if you don't have a good property management team, it all will fall apart because that vehicle will not continue to run effectively if you don't have somebody watching it that knows what they're doing. And if you know anything about real estate, if you know anything about going out there, this is a very key part of the equation that's very difficult to put into place if you don't know what you're doing. So I want to drill down some numbers. We talk about that 15 to 40% potential ROI, and I get a lot of people in the beginning that tell me, Scott, I've never seen more than 3 to 5% or 7% in my my investment returns in my other strategies that I'm utilizing. How can I even wrap my head around 15 to 40%? And I want you guys to understand these are real numbers. Let's go through this example. If you came to me and said, Scott, I got $100,000, what can I do? The first thing I'm going to tell you is we need to learn how to leverage your money. So we're going to take that as a down payment, and we're going to buy $500,000 of real estate. Okay, 20% down is very typical in today's market. So we take that money, we buy $500,000 in real estate. First thing we're going to do is we're going to look at our annual equity growth, and I figured it about 4% for our number here today. That gives you a $20,000 growth in equity from your $500,000 of properties that you purchased. Now remember though, we only put in $100,000. So a $20,000 increase on 100 is 20%. So we're already at 20% ROI, and we haven't even rented the property out yet. So the next line here is we're renting. We got cash flow. Again, I conservatively figured that you have about $12,000 a month of net cash flow, and this is not gross. Right? This is after expenses, after you pay your $400,000 in mortgages that you're going to have, and taxes, insurance, and overheads. We're figuring net cash flow to be about $12,000, and I, again, this next category is something that a lot of people don't realize is even available to them, and this is what kind of takes it to the next level, and that's tax breaks. Okay, the IRS gives some amazing tax breaks for real estate. That $400,000 in mortgage, we got about $22,000 a year in interest. Writing it off lowers our net effective tax rate. Depreciation, standard depreciation is 27 and a half years. We can actually accelerate that if we want and get a bigger number. But again, just conservative numbers today. If we have 20% ROI on equity, 12% ROI on cash flow, potentially 15% ROI on tax breaks, that's how we're getting to the 15 to 40% potential ROI numbers that you see in our projections. And these are real numbers. We have sold hundreds of these types of assets to individuals that have them in their portfolios, and they're performing at or better than these numbers. Okay? People have been doing this since long before we came around. We didn't invent all this. We learned it from other individuals that were wealthy. We've replicated it for ourselves. And I mentioned earlier that our team has tens of millions of dollars in assets that we currently own right now. And we've helped our clients like you create millions, if not tens of $millions of assets for them as well. This is something that we have dialed in. We know exactly where to go. We know what to do. We just simply want to bring this to the general public because it's right now not really out there. There's not a lot of resources that you have today, right now, that you can go out there and you can gain access to these amazing opportunities. So the question that we asked earlier was, do you think that there's a correlation between the fact that most people are heavily invested in the stock market and the fact that they are not happy? Okay. 95% of people that are heavily invested in the market, on average, according to Bloomberg, is getting 3.71% return. Even if you're at the market average of 7% return, okay, that doesn't come close to what the 1% are doing. The extremely wealthy, the people who get it, the people that are using these income producing assets on a consistent basis are getting 15 to 40% returns, and sometimes even more than that. How can you ever get there at 3.71%? Or even 5 or 7%? It's next to impossible to get to where you want to go. Inflation alone is 2 to 3% most years. You're barely breaking even. You're not making any money. You're not creating wealth. You need to learn how to get into the same categories, into the same success principles and strategies that the wealthy are using. One of our executive officers took two of these financial instruments and used them together, and this is what we're talking about is the compounding principle. What he did is he first started his financial instrument, just like McDonald's and JCPenney's and Disney, and he started his financial instrument, and then he turned around and he borrowed against his financial instrument, okay, his own assets, and again, this was a tax-free type of a way of gaining access to the capital, and then he turned around and he used that to purchase a self-storage unit. Okay. About a year later, after he had some value add to the property, he was able to refinance that and pull out $1 million in equity. And by the way, the $1 million is again a tax-free deal because it's a refinance. We're pulling this out tax-free. He then turned around and used that capital to purchase over 10 storage units over the next 10 years. And currently the value of these assets is over $10 million. So we're going to, anytime we talk with anybody who joins and becomes an off-market insider, we're going to do everything that we can to double up on some of these principles so that we can double dip, get better returns, and again, repeat like what you see here. Off-market insiders is going to give you a guide to passive real estate investing. We're going to give you access to these relationships that we've created throughout the years. And again, these relationships were not created simply and easily. We've spent hundreds of hours. We've spent millions of dollars getting to the point where we're at today. And these types of partners and relationships that we have in place that are very, very hard to go recreate, you could do on your own if you want to go do the same thing. If you want to spend a collective 50 years and hundreds of hours and millions of dollars, you can get right to where we're at, or you can just join our program, get access to everything that we've already done, and again, jump to the front of the line. Tax savings, we talked about that a little bit, but I want to go in a little bit more detail because tax savings is vital. The number one cost to small businesses today is tax. I think you guys have heard that before. The average American right now is paying between 28 and 35% in tax every single year. Investment dollars are generally taxed dramatically less. Okay, income producing assets generally have taxation rates that range in the teens or the low 20s, not the high 20s and the 30s. Again, 5-10% over a course of 20, 30, 40 years, that compounds. That is a massive difference for most individuals if they can learn how to lower their net effective tax rate. We have, relationships with CPAs that are top of their field when it comes to helping individuals lower their net effective tax rate. Same thing with our attorneys that we've built relationships with over a long period of time. They can help you create a foundation to build upon if all you need is a simple entity like an LLC or corporation of some kind, and we'll talk about that during our initial consultation of what you might need. But as you grow, you're going to have more protection needs. You're going to have more assets that you got to protect. You're going to eventually want to set up your family, your heirs, right? You're not going to want all of your assets to go through the state and go through probate, right? That can cost 30, 40, sometimes upwards 50% of the entire estate, rather than just creating an estate plan and a family trust and avoiding almost all of that, right? So may not be a concern today. You might not be at that point, but if you are, it's definitely something that we need to talk about. And if you're not there yet, we need to put a plan in place to get you there very quickly to where you need those things. And the whole point is to act like the 1%. Right? Do you think they have corporations and trusts and all these types of entities and protections in place? They do. Asset protection is vital to creating wealth. There's really 4 currencies of any transaction, and as you become an off-market insider, what we're going to do is we're going to try and eliminate 3 of the 4 immediately out of the gates for you so that you have a leg up. Time. Biggest complaint I always get: Scott, I'm busy. I got a lot going on. I got this, I got that. I got family. I got church. I got work. I got, I get it. I understand. I realize you can't just turn around and create another 30 or 40 hour work week just to create wealth. Get it. Okay. So let us handle that for you. Like I mentioned earlier, we'll source the done-for-you real estate opportunities. We'll bring them to the table. We will get you to the point where all you have to do is evaluate and execute. Evaluate and execute. Let us take care of the rest. The knowledge, again, over 50 years of collective experience down here. Okay? And that's just here within off-market insiders. Any of our partnerships or our other relationships that we built over the years that we're going to tap you into, we're literally talking about knowledge that is almost impossible for you to acquire on your own, by yourself. Relationships that we've created are not easy to come by. You can't just sit down and type in Google and get all these relationships that we've built and we've created. By becoming an off-market insider, you'll immediately have access to the relationships that we've created over the last, again, collective 50 years that we've been out there in the investment world. So opportunities. We're going to provide to you on every month a very specific opportunity. And I mentioned earlier with the Done For You real estate, it's not just about single family homes. These could be storage units. They could be apartment complexes. They could be syndications or crowdfunding opportunities. And I could go on and on. There's a lot of different investment opportunities that fall under the income producing asset category. But when we find them, and we identify that they're good opportunities and the ones that would work for our students like yourself, we will bring them to the table. And just like this webinar, we'll have another webinar where we present it. Here it is. It's a individual purchase. It's a single family home, or maybe it's a $50 million high-rise type of building and we need $10 to $15 million to get it rolling. Well, we know that most people don't have $10 to $15 million lying around to invest, but most people have some, right? 5,000, 10,000, 100,000. People have different amounts available to them, but it doesn't matter what the amount is. If we collectively pool that money, we'll get to the 10 to 15 and we'll be able to execute that investment. Right? So newsletters, we provide newsletters on a monthly basis. This is like any newsletter. We're going to update you with investment opportunities and articles and research and things that, again, taking that knowledge and that time element off the table for you. With everybody that joins, we do think it is vital that at a minimum, they have at least one LLC. So when you join our membership to Off-Market Insiders, we're going to provide one to everybody that joins, because it is vital that you have some legal protection, you have some options to be able to help you dramatically lower your tax rate, and that's what LLCs can do for you. But you can't have any LLC. You can't just run down to the courthouse or the website, file, pay a $30, $40, $50 fee and say, oh, I got a LLC, right? You need a proper LLC. You need it set up by an attorney. You need him to sit down and say, let's write some articles of incorporation. Let's create some LLC documents. Let's, have an operating agreement that describes the business for lenders and other people that you're potentially going to be working with. And these documents will be necessary as you become a real estate investor. These are things that banks, financial institutions, other people that you're going to do business with are going to ask of you when they do business with you. And if you don't have it, you're not going to be like the 1%. You're not going to be, you're not going to look like a professional. And that's what we want to do is right out of the gates, immediately from the beginning, we're going to lay out the success principles and the success strategies for you. And this is a vital piece. I would say that this has got a lot more value than the $2,000 that they put on this. The initial consultation is what everybody needs. You need someone to sit down and go over this with you and help you understand, starting point, finishing point. We'll call them point A to point B, right? You're at point A now. You want to be at point B. You want to be like the 1% that are out there. What's that gap? What kind of roadmap do we need to put together to get you to where you want to be? And our initial consultation will help you design a plan, help you understand what you need to do to execute that plan, and then we can continue to work with you ongoing as you follow through, right? As you create the wealth in a quicker, faster, easier way than what you're doing today. We feel like the value of this is around $10,000. I'd actually probably say it's a lot more than that. But you have to put a number to it at some point, and we valued these things that you're going to be receiving when you become an off-market insider at a little under $10,000. But we offer it at a discount for creating value and bringing you aboard and helping you move forward. We've gone ahead and knocked that down to $2,000 or $1,995 as your initial investment. You're going to get everything we talked about. You're going to get access to our investment instruments. You're going to get access to tax savings, asset protection, crowdfunding, done for you real estate. I could go through the list again, but you guys understand by listening for the last 30, 40 minutes what you will be receiving as you become. And $2,000 is a drop in the bucket. Okay, let's just say all we did for you is help you create one asset, and that's it. Would it be worth it? I think it would. But if we can not only help you create an asset for yourself, but teach you how that asset then can replicate, and you can do it over and over and over again without any restrictions. It doesn't matter how many hours in the day it is. It doesn't matter, what you're doing with the rest of your life. If we can create a system that's replicatable, and you can do that over and over and over again, there is nothing holding you back. We'd love to help you out. We'd love to have you become an off-market insider so that we can get you there quicker and faster. The simplest, fastest way is just simply click on the button below the video right now that you're looking at. It says Become an Off-Market Insider Now. They click on that, enroll into their program. We look forward to that initial consultation as soon as possible.